In this video, I'm going to teach you how to trade an entire trend, here, a downtrend on the 1-minute time frame, using only price action and the 20-period moving average as the sole technical indicator for this trading strategy, which is suitable for beginners. As you can see on the chart, there is literally nothing except the candlesticks and the 20-period moving average. So, to trade a downtrend, like in the example here, we're first going to wait for the market to give us a sell signal. That means it needs to show us that it's starting to set up a downtrend, so that we can then take advantage of it and make strategic sells with the right signals, at the right price zones. As you can see, the market gives its signal here. We have the break of this huge support that was holding back prices for a while. Here, it's clear, there's liquidity, it's the seller's market. Now, we're not going to sell here. What we're going to do is wait for a correction upward, an upward move, so we can catch the next drop afterwards. And to do this, we'll use price action for signals and the 20-period moving average. Let's let the market rise a bit and see what happens at the 20-period moving average. You can see that we have a first rejection at the 20-period moving average, which now becomes a resistance. When the market is very bearish, the 20-period moving average will act as a resistance, and so as long as the downtrend is confirmed, the 20-period moving average will serve as a resistance and as very strategic and powerful selling points. Here, the first sell signal comes because we had our break below the support, which now becomes a resistance. We have the downward movement that signals the bearish trend, the first pullback, the resistance at the 20-period moving average that blocks the prices and pushes them strongly downward. And you can see that here, we have a small support that gets broken. So, we have a new low here that is lower than the previous low. This is, therefore, the price action definition of the beginning of a downtrend. So, right here you already have a first selling opportunity, but this is just the start of the downtrend and we want to take advantage of it several times. So, we're going to wait and let the market make upward corrections to the 20-period moving average so that we can safely take more short positions. Look at what the market does here. A small correction phase here where the price moves around, staying below the 20-period moving average. And here, you have your signal for the resumption of the downtrend with this nice bearish candle that breaks the upward trend line. Then, the price settles below the structure here, below the 20-period moving average. And so, here's the second signal. So here, you sell with a stop loss above the structure and you always aim for a risk-reward ratio of at least 2 to 1. So if you're risking 20 pips as a stop loss, you're aiming for 40 pips as your first take profit. You get it. What you need to wait for with this strategy are pullbacks to the 20-period moving average and then the breakout signal for the resumption of the downtrend. Let's see what the market does next. You can see that in a downtrend, it's really always below the 20-period moving average, which is in yellow here. And when the market comes back up to it, as long as the downtrend is still valid, it's just to head back down again. Look at what happens here. Once again, we have a trading opportunity with this small pullback to the 20-period moving average. You can see that the market is making lower and lower lows. The downtrend is being respected. With this bearish Maribozu candle, we get a sell signal at the candle's close. We place another sell here, stop loss above the last high, which is here, and let the market do its thing while sticking to this risk-reward money management. As long as the market is making strong downward moves and small corrections that stay below the 20-period moving average, we can keep selling. Where you need to stop is when the market makes a reversal. And as long as the market doesn't show this, well, we can keep selling with confidence. You can see it again here. We have a rejection to the downside from the 20-period moving average. We break the structure here and we have this little move down again. Now, what's going to be interesting is to see that the market is about to set up its reversal. Let's zoom in a bit, and you can see that the market had re-entered below the 20-period moving average, which meant it was a false bullish breakout. You could still take advantage of this downward move. even if it was smaller than the previous ones. And here, you can see that the market is going to break through the 20-period moving average strongly to the upside this time, with a bullish Maribozu. So here, be careful, this high point is surpassing the previous high, which indicates that a trend reversal is happening and that the downtrend may now be invalidated. If the downtrend had continued once again, we should have held this high here and not set a new, higher price. This high point would have been lower than the previous high, which is simply the definition of a downtrend. And if we keep watching what the market does, you can see that it will start setting new highs. On top of that, you have a double bottom, a well-known reversal pattern. And here, that simply signals the end of the downtrend, at least in the very short term, on the 1-minute time frame once again. So for now, we're going to stop looking for selling opportunities. As long as this low point here isn't broken downward, we stop selling because, quite simply, we have signals showing the downtrend is running out of steam, or even reversing. And so, we don't want to lose our money. Here, during this trend, you had 2 or 3 selling opportunities. Sometimes, you'll have more. In any case, you get the idea. It's simply a matter of waiting for pullbacks to the 20-period moving average to resume selling, but not just any way. Always with very precise, very clear, very strong, and very profitable price action signals.